If you're a real estate investor looking to grow your portfolio by doing the BRRRR method, then you're going to want to watch this video. Even if you're new and want to learn about it, in this video, we'll be going over the financing for the fix and flip and then doing the refinance into the DSCR loan. This is the best combination for the BRRRR method. I don't know if I said enough R. Welcome back to the channel. If you're a real estate investor, then you're in the right spot. We'll be going over many different types of investment loans to help you grow your portfolio. So make sure you subscribe. Now let's get into the video. This has to be the smartest way for you to grow your real estate portfolio starting off. Now let's start off with the first process. So for those of you that are new, BRRRR stands for buy, renovate, rent, refinance, and repeat. So we'll start off with the first process. We'll be covering the financing in this video. So you're starting off with getting a fix and flip loan. And once you complete everything, then we'll refinance into the DSCR loan, a 30-year fixed loan. Fix and flips are typically 6 months to 1 year. Now let's start off with the fix and flip. First off, when you find the property, you're going to want to find out what the purchase price is, the renovation costs, and the after repair value. If you're brand new, it's very important to speak to a local real estate agent who's an expert in that area and who can do the comps for you to figure out what the after repair value would be. It's important to go with a contractor to the property so that you can get the scope of work done, which is a document that is needed when you submit a loan. This scope of work will break down the renovation costs for what is needed. Now that you have the data, you'll figure out what a great purchase price is for you, depending on what your goals are and how much profit you want to make off of it, and if it will work for the BRRRR method. We'll get into this a little bit more in details, but when you want to refinance out of the fix and flip loans for a rate and term refinance, you're capped at 80% max. For a cash out refinance, you're capped at around 75% with almost every lender. There's only one lender I know of that's willing to do an 80% cash out. And we'll get into this a little bit more later in this video. With the fix and flip loans, you'll be lent up to 75% of the after repair value. Down payment requirements are typically around 15 to 20%. As you gain more experience, there are some lenders that are willing to do less of a down payment. And the down payment is only based on the purchase price. We'll be using an example in this video, and we'll say the purchase price is $100,000. Let's say the renovation cost came up to $70,000. And let's say the after repair value is $300,000. The credit score requirement is typically around 640. There might be a few lenders out there that are willing to go a little less. And the loan terms for the fix and flip, they're short-term loans, typically 6 months to 1 year. That's usually the time frame in which you would complete the project. So let's break down our scenario we have really quick. Let's say you found the property, it's $100,000. The down payment will be, let's say it was 20%. Will be $20,000. Now you're left with an $80,000 loan. Typically, the lender will lend up to 75% of the after repair value. So the after repair value is $300,000. 75% of that is $240,000. That is the max you'll be lent. And you have a big room for renovation costs. Now the renovation funds are given to you in draws, which basically means you would pay for the renovation and receive a reimbursement. A lot of people rack up points on their credit card by doing that. You get a free trip while flipping your house. Now, once you've completed the renovation, then you would start the refinance process. Keep in mind, majority of lenders have a 6-month seasoning period. It is very important. What that basically means is that once you purchase the property, you won't be able to do that refinance until 6 months after that purchase date. There's one lender I know of that's willing to do a 3-month seasoning period, and then there's another lender that doesn't even have a seasoning period. The typical documents needed for a purchase for a fix and flip are the purchase agreement, copy of your ID, 2 most recent bank statements to show proof of down payment and closing costs, and your scope of work. Once you fill out an application, then they'll start processing it. The lender will give you a conditional approval, and they'll have some conditions that need to be met. While the lender's working on the conditional approval, you'll be ordering the appraisal and title. The appraiser will go and evaluate the property to make sure the numbers make sense and to make sure the value is there. Now, once you satisfy all the conditions, then you're clear to close. Now that you've completed the fixing of the property, we'll go over to the refinance side. To apply for the DSCR loan, you'll need your ID, a lease agreement if it's being leased. If not, they'll go based off of the market rent on the appraisal. So it is important to know what the market rent is, because with the DSCR loan, you'll have to make sure that the rent will cover the mortgage. And DSCR, for those of you that are new, stands for Debt Service Coverage Ratio Loan. To put it simply, you're covering the debt with the rent amount. So for example, let's say the mortgage amount was $1,000. If the rent is $1,000, you divide the rent by the mortgage amount, and that will give you a ratio, which is 1. Majority of lenders will want a 1 ratio to make it work. There are a few lenders that are willing to go to a 0.75 ratio, which is a negative ratio, meaning that the property cash flow is negative. For example, let's say $750 in the rent and the $1,000 mortgage, you divide the rent by the mortgage, you get a 0.75. Now, it is very important initially to figure out what the market rent is before you go through this entire process. Also, keep in mind that your credit score for the DSCR loan has to typically be around 680 plus for you to receive a higher LTV. If it's lower than 680, your LTV will be lower, meaning that the amount you'll be able to cash out on or do a rate and term refinance on may be lower, which could mess up the deal for you to refinance. Now, as we went over earlier, there's two different types of refinance. There's a cash out and then there's a rate and term. The cash out is when you're pulling funds out of the loan. You're having extra cash that you could use for business purposes. The rate and term refinance is just refinancing the loan balance. You can include your closing costs in the rate and term refinance, but there's no cash being taken out of it. I'll give you two examples. Let's go over the cash out refinance scenario. The property's after repair value would be $300,000. Now let's say that you're in at $170,000 for the loan amount, okay? With cash outs, you're capped at 75% of the loan amount. One lender is willing to go to 80, but we're going to go based off of 75%. Because that's typically what ends up happening. So 75% of 300,000 is 225,000. Let's say closing costs ends up being $15,000. Now this could be less, this is just for the example. So you're at 225 in the cash out, 15,000 for closing costs, subtract that. Now you're left with 210,000. Your loan amount, your lien is 170,000. So you subtract the 170 from the 210 and you'll get 40,000 to you. So after closing costs and everything, you're walking away with $40,000. That's the cash out. Now, rate and term refinance is different. So let's say the loan amount was $170,000. All you'll do is replace that short-term loan with a 30-year fixed loan or 30-year interest only, depending on which route you take. There's no cash out involved. The loan to value will be significantly less because it's only $170,000 for the new loan amount when you do the rate and term refinance. Now, with rate and term refinance, you can include the closing costs inside the loan, just like the cash out. So let's say it was $15,000 for closing costs. You're looking at $185,000 for your new loan balance. That LTV is significantly lower than the cash out. And typically with lower LTVs, you'll get a better rate. So those are the two types of refinances. Now let's get back into switching over to the DSCR loan. Typically the documents required for the DSCR loan are ID, a lease agreement if it's being rented, your homeowner's insurance, and your proof of primary residence. So that could be a utility bill or a mortgage statement, just basically showing that the subject address and the mailing address is the same with your name on it. And we'll also need the payoff statement, which we can get. You'll need to fill out an application and then we'll need to submit it. And remember, very important to remember, your credit score will need to be higher for you to get higher LTVs. So make sure that your credit score is at least 700 so that you can pull out the max LTV. There are some lenders that are willing to have you pull out the max LTV with a lower credit score, 680. When it gets less than that, then typically you'll have to cut the LTV. And this credit score requirement could change. Now that you've submitted all the documents and completed the application for the DSCR loan, we will submit the deal. Once the deal has been submitted, you'll get some disclosures to sign. Once you sign that, it will be in for conditional approval. And while it's going through conditional approval, we'll be ordering the appraisal and title. Once you get the conditional approval, there'll be some conditions on there that we need to satisfy. Once we get that satisfied and have everything in and the appraisal makes sense, then we're clear to close. And that is the BRRRR method. Again, some very important things to keep in mind before you start this entire process at the beginning stage is your credit score. You want to make sure it's up so that you could pull out enough cash or have that rate and term refinance at that specific number that you want. 2, make sure that you find the market rent so you know the DSCR ratio will work. Now I'll be making more videos about fix and flip loans, DSCR loans, and other investment loans. So make sure you hit subscribe and comment. Let me know if you had any questions on anything. I'll be happy to answer those for you or make more videos if you weren't clear on certain things. And if you would like to apply for the DSCR loan or fix and flip, remember that link is in the description below. Fill that form out and we'll contact you about that scenario. Thank you guys for watching.